Hi there and welcome to the channel. Today we're doing a deep dive into something most of us know we should understand, but many of us don't. Life insurance. So what is it? How does it work? Who needs it? And how do you choose the right kind? Well, let's break it down in today's video. So what exactly is life insurance? Well, life insurance is an agreement between you and your insurance company. Basically, you agree to pay a monthly premium, and should you pass away during the term of your plan, then your company will pay out a lump sum called a death benefit. You think of it as a financial protection for the people that you love that you leave behind. It can cover things like day-to-day living expenses, college tuition, debt, mortgages, and more. And there are two main types of life insurance. There is term life insurance and permanent life insurance, and we'll break down the differences later in the video. Now, of course, if you have a life insurance plan, it's not for you. It's for those that you love that you leave behind to offer some type of financial protection. And here are the reasons why people typically buy life insurance. Income replacement. If you are the primary earner, then some type of life insurance policy can help to replace your income. Debt protection. To make sure that your family isn't left paying off car loans, mortgages, or additional credit card debt. Children's education. To cover future tuition or education expenses. Funeral expenses. Funerals can cost between $7,000 to $15,000 or even more. And legacy planning. To leave behind a financial gift, support a charity, or fund a trust. But not everyone needs life insurance. So who does and who doesn't? More on that in just a minute. But first, let's compare term and permanent life insurance, because once you've made the decision to get a life insurance policy, this is the next decision you need to make. So first, there's term life insurance policy. This is going to provide coverage for a specific time, like 10, 20, or 30 years, and it's great for income replacement or debt protection during peak earning years. It's also much cheaper. However, term life insurance only pays out if you die during the term, and it has no specific cash value. Then there's permanent life insurance, which actually stays in effect throughout your entire lifetime as long as you continue to pay the monthly premiums. However, it is more expensive. However, it does include a cash value component that grows over time, and it can be borrowed against or cashed out. Usually this is going to be used more for estate planning, cash strategies, and of course, long-term life insurance. So what are the key differences? Well, first and foremost, of course, term life insurance is for a specific term, 10, 20, 30 years, as opposed to permanent life insurance, which is lifelong. As far as your financial contribution, generally speaking, term life insurance is going to be much less expensive than permanent life insurance. Now, on the flip side, term life insurance does not have a cash value as opposed to permanent insurance, which does. And if you're looking to understand the terms, then term life insurance is pretty clear-cut and simple, but permanent life insurance can be much more complex. So, which is right for you? So let's talk about who actually needs life insurance, because it's not for everyone, and it could be just an added unnecessary expense. First and foremost, as health insurance brokers, we would highly recommend life insurance for people with minor children, people with mortgages, couples where there is only one primary earner, business owners, and people caring for aging parents. Now, on the flip side, you probably don't need life insurance if you are single with no dependents, if you're retired with adequate savings, or of course, if you're a kid or a teenager, you probably don't need life insurance just yet. Remember, life insurance isn't for you, it's for the people you leave behind. Now let's talk about a big one. How much life insurance do you really need? But before we do, a brief pause to remind you that at iHealth Brokers, we are licensed health insurance brokers, so if you have questions about life insurance or any type of health insurance, you can reach us in the comments below or at the number on the screen. We are licensed nationwide and there's absolutely no charge for our services. Now, we do release these videos on a weekly basis, so please make sure to subscribe to stay up to date, and of course, make sure to like this video so we can get this information out there. All right, let's get back to it. So the first method of determining how much life insurance you need is known as the DIME method. So D stands for debt. All of your outstanding debt, credit cards, loans, mortgages, etc. I stands for income. Multiply your annual income by the number of years your family would need it, usually 10 to 15. M is for mortgage. Make sure to include the balance of your home loan. And E is for education. Estimate future education expenses for your kids. Or you can start with a really simple rule, which is just 10 to 15 times your annual income. Also, make sure to consider existing savings, spousal income, and any contributions that you may have from your employer. So how exactly does life insurance work? What goes on behind the scenes? Well, first you'll go through some type of underwriting, which is a process where insurers assess your health, age, lifestyle, and risk. You might need a medical exam. The company will offer you a premium based on your underwriting, and once accepted, your policy will go into force. If you die while the policy is in effect or you're in your term for a term life insurance policy, then your beneficiary would file a claim and it would pay out the death benefit, usually tax-free. Now, just like with anything else insurance related, there are some big mistakes you can have made. So here are some key mistakes that you would definitely wish to avoid. First, buying too little coverage. Life insurance is not usually that expensive, so it's definitely worth it to purchase a plan that will offer a higher payout. Also, waiting too long because those premiums can drastically increase with age. Additionally, although you may have a primary beneficiary in mind, make sure to name a contingency beneficiary as well. And don't assume that life insurance offered by your employer is enough coverage. Additionally, if you do experience any sort of life-changing events, make sure to update your policy. It's always important to review your policy on a yearly basis. So how do you actually choose a plan? Well, it's very important first that you know your goal. Is it income protection, a legacy, or just to take care of those final expenses? You also need to compare the plans and quotes, and you can do so using an online marketplace. However, we would highly recommend that you work with a licensed insurance broker, somebody who's more familiar with this sphere. It's really too important to leave it to chance. Remember, you can always start small and increase your plan later. Now, if you have questions about life insurance, you can reach us in the comments below or at the number on the screen. We are licensed health insurance brokers and we're licensed nationwide with absolutely no charge for our services. If you'd like to learn more about health insurance, I highly recommend you check out this video over here or this All About Marketplace playlist. As always, thank you so much for watching, and before you go, make sure to like and subscribe. We'll see you next time.